The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 19th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical and marvelous Monday. I know I did. Let's make sure that each of us have an extraordinary Tuesday. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I recognize that life happens for us, folks, it means we can find the gift in every set of circumstance that life is going to toss out at us. You and I today, we're going to go take a look at different circumstances in the markets. We can look at daily, weekly, monthly, intraday charts for anything that you'd like. All you have to do is just give us a call at 877-927-6648. Let me know what you're looking at because, you know, I'm absolutely grateful for your presence here this morning, so I'd like to feel more of your presence. And the easiest way to do that is call. And, of course, internationally, you can do that at 727-445-1044. This is Terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up 26 points, trading out at 18,285. NASDAQ futures up 10 points at 45.17. The S&P futures up 2 points at 21.28. We got things cracking to the upside, cracking to the downside. Goldilocks to the downside right now at $13, trading out at 12.1460. You've got light sweet crude, that's back $1.10. Silver's off 33 cents. The U.S. dollar index, that is on a charge higher, up $1.23, 1 3/10% as we speak right now. That is going to motor on higher. Why? Because we're going to go take a look at the euro versus the U.S. dollar. We're going to find out that the breakout was a false breakout. Price has gotten back down below that descending price channel. So we'll go take a look at targets out there. A quick peek across the globe. What do we see out here? They're having a breakout party in Germany. Sounds to me like Mayfest. Yeah, it's really Oktoberfest, but they're having it in May. You've got the DAX is up 220 points, up nearly 2%. So let's start in by taking a look at that. In the case of the DAX, it's been trading in basically let me see. Maybe I'll look at it on this chart here. I think I've got them both on this one, so let's just take a quick peek here. Yeah, I do. Let's take a look at the DAX. So here are two different price channels. There's the longer-term price channel. That's really the one that's in effect. The DAX has been in a rising price channel. This one just taking us back into October 2014 out there. As we take a look at it, we know that we were in, or the DAX was in, a sub-correction price channel. That's the red diagonal lines on my screen. Never got down to the bottom of that channel, and price really should have been able to have been contained within inside this area, but no. This morning here, gapped up above the descending little subcorrection price channel out there. Now let's just take a look at retracements, get a feel for where the DAX may run into resistance out here. And that resistance level inside the DAX, your normal resistance level, brought to us by Leonardo de Fibonacci, de Pisa, would be the 0.618 retracement area of 11,924, 923 out there. It looks like that's where the DAX is headed to. Now, look, it can head much higher than that. It is broken through that correction subchannel inside of its longer-term channel lines out there. Quick peek in at the FTSE. That's up 32 points. We know the FTSE here, as we take a look at the weekly charts. We know the FTSE continues to reject the 1999 level. That's the consolidation area at 69.50.60. We can see it's been tested 1, 2, 3. This would be week number 4. Of course, we're only in the beginning. Well, in this case here, it's kind of mid-stroke in its day. Well, it's more than mid-stroke. It's towards the end of its trading day. So it's a weekly chart that we're taking a look at. But this would be another week's test of 69.50.60 level. You know, testing, and rejecting at this stage. And that's what's going on inside those two markets. Let's go back and take a look at what's going on over in Asia. What did they do last night? Well, yeah, the Nikkei up 136 points, 0.7% out here. What's the Nikkei doing? Nikkei has been working off an overbought condition. We can say that at this stage here, looks like that is done. It's headed back up to its highs out here from the trading day of, April 23rd in the 2252 to 2116 area. If we take a look at what's going on over in the Shanghai, over in China. 140 points to the upside last night. Explosive move up there. That's 3%. If we take this is a daily chart that we're taking a look at. What you and I know is that the Shanghai had gotten into that extreme overbought condition, just worked its way sideways to work off that condition, the most bullish thing that it could do. Never even getting down to a 0.382 retracement level. At this stage here, that is headed back up to its highs. It'll try to take out the 47.92 area. That's what's going on inside of the Shanghai. If we take a look at the Hang Seng over in Hong Kong, up 102 points, 0.4% last night. What is it doing? Still just really moving sideways, working out that overbought condition. Okay, so that's what's going on inside of those markets. Now let's go take a look at our markets. Let's go see what do we have going on. Let's go take a look at the daily chart. What do we have? Let's start. Upper left is the Russell 2000. Russell 2000 having a strong like bull type day yesterday. If we take a look at its retracement level from the high, let's go all the way back to the April 15th date, down to the low that came in here on May the 6th, the 0.786 retracement level, 1262.20. It's been up to a high of, well, I'd tell you what that is if I could see it. It's been up to a high of 1260.40. So, within $2. It's going to qualify as at least achieving that area. Now, the reason why we take a look at these 0.618, 0.786, and certainly the 0.382 retracement levels, sometimes they can act, oftentimes they can act as the C point of an A to B equals CD to the downside. In the case of the Russell 2000, she's the only one that would actually have this pattern in play, because you'll see as we go take a look at the ES, that's to the downside. To the upside would be a different case if we take a look at the ES Mini, because quite frankly, it possibly could have several A to B equals CD patterns that it may be forming to the upside out here, because we know that the ES Mini has gotten above this little consolidation of about 75-ish points or so. It's gotten above this little key reversal session out here from April 27th. That should be old resistance. It was tested only one day out there. You like to see 3 tests of that area. Nonetheless, it's still identified a area of resistance. Old resistance ought to become new support. So we won't know if there's a failure inside the ES Mini on a daily chart until we see a close back below 2119.75. Then, of course, it needs to make a move back below the 2110-ish type area out there. I'd have to say 2117.75 to be exact out there. So that's what's going on inside. Now, you may have said, well, where are the A to B equals CDs out there that could be? Well, you got a couple of them. You've got one just coming all the way back here to the low on February 2nd, 2015. The B point is out here. This is really the one that's in play. Well, they're both in play. February 25th, and the C point down here on March the 11th. Uno to uno, 1-to-1 says 2174 on that one. Let's go ahead. So you can just remember 2174 just to keep the charts a little bit clean here. Another A to B equals CD pattern that would give us a price projection here. This is a shorter term one that says 2143 is the number to 2166. So that if we see a move above 2143, we ought to expect 2166, 2174 inside of the ES Mini out there. So we've got we've looked at this both on the failure side as well as on the success side out there. If we take a look at the Dow, what do we know about the Dow? The Dow breaking through its consolidation from 17,579 to 18,188. It too, on that longer term, going back to the February 2nd time frame out here, gives us a 18,773 price projection. And if we take a look at what 17.6 to 18.2, what's that for? It's about 600 points on top of, so it gives you 18.7. Yeah. So you've got the A to B equals CD as well as a consolidation pattern out there. Gives us that price projection of 18,773. That is, unless we see the bears, the sellers, actually step up and then drive this thing lower. Now, driving this thing lower inside the Dow futures says you've got to get back below 18,188 in order for this to be a failed breakout, which is always a possibility because we're going to go take a look at the breakouts in gold. We'll go take a look at potential breakouts as well as the breakout inside of the euro. But let's finish this off by taking a look at the NASDAQ on its daily chart out here. Now, the NASDAQ, remember I mentioned that inside the Russell 2000, it was really the only pattern in play that could form your traditional, your normal. Look, the markets can do whatever in the Sam heck they want to do out there. But the reality is that typically once you get beyond a 0.786 retracement of a move out there, it's not so much a real A to B equals CD pattern. It just really is more of a consolidation or a beginning of a new consolidation. Nonetheless, we can see that yesterday price closed right at the 0.786 retracement of its last move, which was at the 45.07 area. The close was at 45.07, so it's right on the number. Today, prices moved slightly above that. You're still trading inside its swing point high out here from the trading day of April 27. As long as it stays within 45.09, you're at 45.13 right now, 45.09 and a quarter. Says that price can go up and at least test that high at 45, 55, 50 out there, maybe even a bit higher than that. That, in fact, could be an A to B equals CD to the upside. So at this stage here, no breakdowns in the, at least in the 4 daily contracts for the index futures out there. However, we do have a nervous breakdown going on, and that is inside of the euro. We're take a look at the euro versus the U.S. dollar at this stage. And as this chart populates on my screen out here, a 15-minute delay on that, but that's no big deal. What you and I know is we've been watching this long-term descending price channel, taking us back into the summer of last year, into the July time frame. Now what we saw out here was we saw a break of that area back on last Thursday, last Friday, and then yesterday we see a little bearish engulfing candle coming right down to the bottom, or the top, I should say, of that descending price channel, and now today clearly breaking down inside. Okay, so you say, what does that mean? Well, look, if you've got a euro that's moving lower, then you're going to see weakness in the euro, strength in the U.S. dollar index. U.S. dollar index has no other option but to go up, because it's 57% of the actual weighting inside there. It doesn't even matter what the pound, what the yen, what the Canadian dollar, what the Swedish Swiss franc is doing, and what the Swedish krona is doing out there. That's not the kind that you put a line in, although you probably could put a line in it. If we take a look at the April 13th low, that's going to be the beginning of our retracement level to the high out here on May the 15th. We'll see that it's already done a 0.382 retracement, and it's coming in with what? A wide, and I do mean wide, ranging bar on the daily chart. So what does that tell you? What does that tell me? Well, what it says to both of us is that when you come into a retracement level, the wide-ranging bar, PDG, pretty darn good chance that you're going to go ahead and move to that next level. Well, in this case here, the next level is the 0.618 retracement level. This says the euro wants to, versus the U.S. dollar, wants to head down to $1.08 at a minimum. $1.08. It can go lower. We'll just pay attention to what the buyers and sellers are communicating to you and I, because after all, they have one job in this world, and that job is to go out there and paint signs. Paint those wonderful, beautiful Japanese candlesticks. Oppa is what I say. Of course, that's bringing a little grease fire into the game out here. We're not going to do that. When we get back from this break, let's go take a look at the euro, Japanese yen. Let's go take a look at the Great British Pound, and then let's switch over to Goldilocks and silver. Hi-ho, silver. This is Steve Rhodes with TFNN. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, yesterday, on Larry's show, I caught the replay. I got a couple emails asking me if I could go take. There are folks out there that have been longtime listeners, and thank you. Whether long-time, short-term, doesn't really matter. But there's many folks that know that many years ago, I went ahead and I took the ephemeris. Now, the ephemeris is the tool that each of us can use to understand what the exact planetary alignments are, going back as far as you want, going forward as far as you want. I went ahead and digitized 300 years worth of it. So that means I could go back and I could take a look at electronically any aspect that we want. And so I was wondering where the emails were coming from. And I recall seeing a posting inside the den that Larry on his show had Norm Winsky, who was talking about some cycle management, some astro management out there. So I went ahead and re-listened to the show this morning and saw that he was talking about the combination. Last night was when Mercury went retrograde, and the day before we had the 18th. Yesterday we had a new moon that came in. So and he had gone back, and I think he only looked at about the occurrence of it is relatively rare, no question about that. In fact, so I only had about 15 minutes before I came on the show this morning. I was trying to figure out what was the impetus behind the emails that came out, and so I went back to 2001. That's all the time that I have, was to go back to 2001 and check from 2001. Really, I went from 2001 to 2018 just to see how often within a 24-hour period of time, you had that combination out there. And the first occurrence from the 2001 forward, now I'll go back at some point in time and go back a bit further, but there was an occurrence back in on August 27, 2003 out there. And that's if you're watching this on Tiger TV. And really, this was the whole idea was to show a change in trend inside the marketplace. And so if you go back to August, it was August 27th on Wednesday. That came in August. That would have been at about 12:30 in the afternoon was when we had the new moon. And Mercury going retrograde would have been 8 minus 3, 5:43 in the morning on August 28th, which was a Thursday out there. My arrow is pointed at 8:27. The next day, 8:28. The day before, 8:26. You can see, really did mark a change in trend out here. Now, that change in trend ended up getting tested back here on the trading day of September 30th. Price moved higher, came back, eventually tested it, and that's still held as a support. I don't know if that's coincidence or not, but there was a change in trend that occurred out there. Well, the interesting thing is that the next date that popped up on my screen that had that same combo, I was like, really? That's kind of interesting, and it's too bad that I'll send this email. I'll send an email off to Larry, and he can forward it on to Norm today. But the actual next date that popped up on my screen, you too will probably say, really, was October 11th, 2007. And October 12th, 2007. That was a Thursday and Friday combo. The new moon came in at 2 past midnight on Thursday morning, October 11th. And on October 12th, well, actually, that's would have come in October 11th at about 11 o'clock in the evening out here. So the interesting thing out here is if you take a look at the actual high, this is the Dow chart, by the way, that I have up on my screen. That came in on October 11th, 2007. I don't know, is that a coincidence or what have you? Actually, I think that's the most famous date of all with regard to the combination of Mercury retrograde and the new moon. Now, there were only two occurrences, I believe, that Norm talked about. I just once I heard where the emails were coming from and why, then I kind of said, okay, well, let me go take a look at it. Now, those two dates happen to be in 2015. By the way, there's not another one for several years from now. I went out to 2018. I stopped there. I just needed to prepare for the show, actually. And but there was one that took place here on January 20th and the 21st. And there was, just like the one that we saw back in 2003, there was a price. It did mark, a change in trend. Only lasted for a few days. Price came back and tested that area. That was back here in February. But today, basically, marks that occasion between May 18th and today, May 19th, out here. So 4 instances do not make a very good sample size. But there's not a lot of these occurrences. But they do go back before 2001. I'm certain of it. I'll just need to go back and take a look at it. But it was when that October 11th and 12th just showed up on my screen, I was like, as Z in the Den just put, wow. That was exactly what I said. I looked at those dates and I said, yeah, that was the top. Was it not? In any event, so that's for your for whatever that means out there, use it appropriately. So let's go back to the markets, because there's other things that are going on other than just up in the sky. Although, what's the most important? So we took a look at the euro with regard to the U.S. dollar index. I guess we're gonna have to wait till we get back from this break. My apology. The Dow futures up about 14 points. We'll see how this market's gonna pop, gonna drop. We'll go look at Goldilocks, silver, light sweet crude, anything else that you'd like as well. This is Steve Rhodes with TFNN. Right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 3 points, straight at 18,295. S&P is flat at 2129. Composites up 7 points at 5,085. Russell 2000 is flat. DAX up 195. FTSE up 24. Gold back $11. Silver up 37 cents. Leading the charge, the upside. Red Robin Gourmet Burgers up 10%, up $7 and change. Bluebird Biotech, that's up about $9. Netflix is up 4. Take-Two Interactive up $2.66. TJ Maxx up $3. Momo's up $2.44. Amazon up a couple bucks to the downside. Intercept Pharmaceuticals off 5%, down $16. Urban Outfitters down $6. Edwards Life Sciences off about $5. Dick's Sporting Goods off $3. LinkedIn down $3. Walmart off about $2 out there. Now back to, let's go take a look at gold, silver. I don't know. We'll find something else to take a look at out here. Let's take a look at gold. Looks like my system freezing just a tad as this opening data hits my screen out here. Let's take a look at Goldilocks. What do we know about gold? Well, I have not been convinced that gold is truly breaking out, as you know, and I said that I would get convinced if we could see a clear close above 1224.50. That's the swing point from April 26th out there, and we didn't really see we did see a close above it yesterday, but which close was 1227. That doesn't exactly float my skirt up. Now, the U.S. dollar index is actually, the gold is actually pulling back pretty nicely. So let's keep things in perspective out here. Considering the ramp up in the U.S. dollar this morning with the euro pulling back, gold is really not too shabby out here. But the reality is it's really back inside this trading range between 1224 and 1180-ish out there. And if there is a pullback, if there's a move below, we'll call it the TAS market profile of 1210.30 out there. What we likely will see is move back into that 1180-ish type area. That's what's going on inside of gold. If we take a look at silver having completed that 1 to 1.618, A to B equals CD to the upside. Actually made, it did that, and now we're seeing a pullback there. So you make that kind of a move, and it is normal to do something else, and that's what we are seeing inside of silver. Inside of light sweet crude, back $1.14 right now, trading out at $59. What is it doing out here? Light sweet crude, if we take, it's probably coming back in that 57.94 area. That ought to hold as some pretty decent support, but you do have some pretty good volume today to the downside inside of the gold contract. If we take a quick peek at the euro-Japanese yen, Stevie's favorite currency pair, and yours too, because it tracks the direction of the U.S. stock market. Well, yesterday we got a nice little reversal signal. You're getting follow through this morning. What does that mean for you and I? Well, again, just like we took a look at the euro versus the U.S. dollar, the euro versus the yen, it's not made its way. Has not made its way back to the 0.382 retracement level. So we can't really say, which would be at 132.81. We can't say whether it's going to be a wide-ranging bar moving back into it. If it continues lower, it would be a wide-ranging bar. If it got down to that 0.382 area, that would say a further pull back inside of the market. So, the Great British Pound, let's go take a look at it versus the U.S. dollar. That is also pulling back. It has not yet completed the A to B equals CD to the upside, but it is now getting back below that B point. April 29th high, which is 154.9 out there. If we take a look at the retracements here just of its last leg to get a feel for what may be going on here, it's made its way through that 0.382 retracement. Looks like 1.536 is its next stop versus the U.S. dollar. That covers those currency pairs. Now, I see I've got a couple questions here that say, Steve-O, you showed me that October 2007 high. Are you saying that this is going to be an all-time high? No, that's not what I'm saying. I'm saying I went ahead and took a look at a set of planetary alignments. Well, one was a lunar alignment, the new moon, in combination with Mercury going retrograde, and just look for those dates and put them up on the screen out here. What I did, what was interesting, when I originally digitized that ephemeris, it was so that at an instant, or close to an instant, still required a little bit of work, I could overlay whatever planetary alignment combination on a chart. And that way I could go back and actually do the mathematical probabilities to see if there was something that had a high degree of probability. We're always looking for some type of edge, right? And in doing so, that's when I identified the pattern that was actually more prevalent at tops and or bottoms, but really at the tops. And if we take, I'm going to show it to you on the screen here. If we take a look at the Dow Jones Industrials, that's what we were looking at when we were looking at that when we're looking at that aspect combination out here. As the top was being formed out here in October of 2007, price was moving higher with less relative strength out there. That's the pattern that sets up, not necessarily all-time tops, but sets up reversals and has called many of all of these all-time tops. Go back to the 1928, 29 time period out here. And then we had a nice little bearish reversal signal. So we have that as well going forward. And if we go ahead and we take a look at right now where we're at today, I bring us to today, we might get a bearish reversal signal, but we do not have that same stretched pattern inside of the Dow on the daily. We don't have it on a weekly chart. I'll put up the weekly chart for the Dow. We're not going to see a price relative strength divergent pattern. Let's take a look at the monthly chart out here. I don't recall. I think we had one, but I think that price has surpassed that area. Yeah. But no, we do have one out here on the monthly basis. But price has surpassed it at this stage. So price has got to get back, at least this week, has to get back below that high from December out there. So anyway, so that's what's going on inside of the Dow. Do I think that it's a all-time? No. Would it surprise me if yesterday was the actual high? No. What would it really be following more than anything else? It would be following the normal cycle. The normal cycle is this. This is the normal cycle pattern out here. This has been going on for 82 years. This is sell in May, right here, where my cursor is around. This is the May cycle out here. And the May cycle says that right here yesterday, May 18th, that the market was supposed to move back towards the highs that were previously in there back in May. Guess what? That's exactly what the Dow did. And then it says that the market is supposed to turn. So this has, now, this incorporates everything that's out there, but I can tell you that for the last 82 years, that's what the market does. And, you know, why? I have no idea. You thought I was going to say something else, refrigerator or something like that. But the reality is I don't know. I just know that it is out there. So it's kind of interesting. I've got an 82-year-old pattern. It's not me. The Dow has an 82-year-old pattern of yesterday to today being the high and in a nice swift move lower. Now, one of those scary moves is really what it's all about. What it is that could start that fire, grease fire, I don't really know. But if it did, and the pattern continues, what Stevie is saying is that you should expect I think it's a scary low out there. And it's the type of scary low that you want to buy because people will get so caught up into the, you know, oh my God, the sell in May, it's finally taken out and here's what's going on. And as soon as they really start coming out of the woodwork, that's when we'll go ahead and want to, you know, buy the market. But look, that doesn't mean the market can't go higher. You know, nothing has cracked just as of yet. We're just taking a look at patterns that are out there, and then we go ahead and, you know, make decisions on how it is that we want to trade things. Now, back to some of the stocks that are moving, and hopefully that's good information, good education for you. Let's take a look at some things that are moving inside of the market stock-wise. Let's take a look at to the upside and to the downside. Let's go take a look at Red Robin Gourmet Burgers. I don't even know if they've got a Red Robin Gourmet Burger here in Florida. But, you know, their net income was up 38.7%. Their revenues were up. I don't know if that was same-store revenues or they're opening up new locations. But if we take a look at the stock chart, it's up with 296,000 shares as we speak right now. And, yes, I understand they are. They are in Florida. And I'm hearing that the burgers are delicious. Well, in this case here, the stock is delicious this morning. You've got some nice volume. This thing came back to a breakout area. This had nice wide price spread and accelerated volume. That was on the trading day of February 13th. That low was 71.37. The volume on that session was 998,000 shares. Yesterday, price came back to was 665. So it came back into a breakout area, tested with light volume. Actually, no real surprise here that it is moving higher this morning. Where is it moving to? Well, it's going to move back up to its highs from March 24th. That only has 316,000 shares on that day, and you've already done 302. 85.31 is the bottom of that swing point. That is where Red Robin Gourmet Burgers is headed to. If we take a look at Bluebird Bio, 164.50 is what it's trading at. That's up 5%. That's up $8 out here. This had a swing point that it's tackling this morning from May 12th, so just a few days ago. The high out there, 169.88. You had volume there, 700,000 shares. You're already up there with 250,000 shares. If it takes that out, it'll set up an A to B equals CD to the upside. Ticker symbol there, BLUE. If we take a look at things moving to the downside, we've got Intercept Pharmaceuticals leading the charge off $35, down 11% out here. Looks like I don't see what's going on. Well, some pivotal. Now it's a pivotal phase. What? Pivotal phase. Come on, pop up. Phase 3 clinical trial of obeticholic acid. And I don't know what that means, but let's go see the stockholders do. The stockholders are selling this off as we speak right now. It's headed for this most recent swing point out here on April the 30th, somewhere between 268.10 and 247.60. It's coming in there with volume, though. Has not gotten to that area. Well, if it does get to the top of 268.10, you're at 281 right now. It'll be coming in there with volume. What does that say? It says you got to look out for the breakout areas. If they don't hold, which would be March 26th low at 252, then you've got to potential to come all the way back into the 171-ish type area. You got to take things one step at a time, one path pattern at a time. If we take a look at Priceline, that's up $5. This thing is just trading in a sideways consolidation between 11.29 and 12.64 out here. No real information. It certainly does have a supply line up at the May 7th high, 12.27.89. There were 2.1 million shares to the downside inside of Priceline. To the upside, you've got Netflix. That's up about $8. That's up $1.3% out here. Netflix making again a new high, strong like bull inside of Netflix out here. If we take a look, where's it headed to? Excellent question. I don't really know. I think at this stage here, it's somewhat off of the charts. Woo. That's off the charts when my system there crashes. That's an off the charts type thing. So no, your screen went white or blank, not because of something you did, not really because of something I did, but because of something the system decided to do. So we've got it rebooting out here. Let's see how quickly it can come up. If it doesn't, Stevie's always got a backup plan. That backup plan being what? Well, let me go take a look at a couple charts out here that might be of interest to you. That's what we're going to go ahead and take a look at. Let me see which one might be of most interest to you. As we take a look at it. Okay, we're back up and running. Hey, that was a strategic pause out here as we took a look at it. So we've got, come on, populate. Come on, see it. Do it for we're live. We're on. There we go. Let's see. Now let me get rid of that there. Okay, we're back. We were going to take a look at, I have no idea, but let's go take a look at Urban Outfitters. That's off 15% here this morning. Looks like their results missed. Let's see if we get this to populate on the chart out here. Oh, this could be a fun second hour for sure. But Stevie's always got a plan B. Well, let's let that populate. Let's go take a look at the ES Mini. Let's go take a look at the 2-hour chart out here. It's probably a chart worth following during the day. Hey, if that Mercury retrograde new moon is going to take place, then we can take a look at other patterns, or we're going to take a look at the 82-year cycle that's in play. Let's go take a look at other patterns out here. So we're taking a look at the 120-minute time frame chart for the ES Mini. What we can see is off of the bottoms that formed out here back on the trading day of what? That was a trading day recently here. That was back in, stop that. That's back here on May the 7th. If we take a look at the low on May the 7th, makes a point, the B point out here. That's on the trading day of May 8th, makes a retracement, about a 0.618 retracement on May the 12th, right? That 0.618 retracement. Guess what? 1 to 1, A to B equals C to gives you a price projection of 2135.75. We have not seen that level get hit. Instead, we saw a movement up to the 2134 area. We can see, hey, remember at that top, in 2011, we took a look at the Dow. It had one of those price relative strength divergent patterns out there. Well, guess what? We actually have that in play as we speak right now inside of the ES Mini. So we've got a sell to D point that is being confirmed as we speak right now. It'll be confirmed as we come into the 10 a.m. session out here. We've got 10 minutes. We had a small little doji candle that actually formed at 6 a.m. At 8 a.m., small enough bearish engulfing candle. It took really no effort to do that. Here's the real key. We've got a rising price channel that's in play out here. We've got Apogee at 217.75. We can see that sometime within the next hour or so that any push lower inside the market could come down and intersect that intersection of Apogee and Main, Apogee and the rising price channel out there. If that level fails, if we see a close below that level, maybe that 82-year cycle, maybe that new moon, Mercury retrograde, maybe Stevie's price relative strength divergent pattern, maybe that's strong enough to go ahead and get a decent retracement, even one of those potential scary lows in the marketplace. Yes, folks, probably I am one of the few that believes that that is still a possibility in the marketplace. And why should anybody else believe it? Dow's only off 18. S&P is flat, and the composite's up 6 points. This is Steve Rhodes with TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 10 points. No big deal. S&P's off half a buck. Composite's off. Composite is up 4. Russell is down a couple of bucks. DAX is up 204. FTSE's up 23 bucks out here. I see I'm kind of running here hobbled. Only part of my system is actually working out here. So that's a bit of a bummer. If we take a look at the VIX index, this chart is populated. It's trading at 1288. The number here to be watching today, tomorrow, 1395. That's your 50-day exponential moving average out there. Any close above 1395, that's when real carnage can be done inside the marketplace. Otherwise, the market tells us that there's a bunch of liquidity in the market. Now, the liquidity gauge here is we've got two opposing forces out here. One opposing force is the VIX index. As long as the VIX is below the 50-day, it's a measure. It says to me that there's liquidity. If we take a look at the euro versus the Japanese yen, that's got a different message out here. At this stage, we're seeing price pull back. And as we mentioned, it's still got quite a ways to go lower in order to get to that 0.382 retracement out there. So with regard to what else is it that you want to watch for, I would say probably the chart of the key chart to be focused on today is going to be in this ES mini right now today for today's trading. We'll call it the 2117.75 level. Moving back down there, testing that, boinking it, and then bouncing off of that line says that level of significant level of support will have held. Getting back below that area with any significance, meaning a close below that area, and then what we have is a change of trend since the bottom that was put in, the most recent bottom back on May the 7th, and then we start taking a look at where price could pull back to. But those are the areas that I would be watching in today's market. So if you're off to start your Tuesday, your terrific Tuesday, have a great day. Stay tuned. The Tom O'Brien Market Minute will be up next, and I'll be back with you at about 10 past the hour. Dow's off 7, S&P is flat, composites up 5 points. Have a terrific Tuesday, folks. Look forward to seeing you soon.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.